when we first started kind of introducing you guys to this, it was basically that you can find, I'm able to find supply and demand with no candles, right? If right here I don't have a single candle on my chart, but I'm able to find the resistance points and not be kind of biased towards where we're going to go. So for people that are, let's say, on this call here, I would just start marking some levels here, and I'll put my supply and demand in these ranges, so you guys can at least see how well these work, and even without the candles, right? I mean, without cheating and knowing where the levels are. And what I usually do is I'll point these out, and these will be my demands or supplies, depending on where the price is. Right here, we don't know. So this right here, and then we know that here, if you guys look, we have a couple of supplies, right? We have 1, 2, 3 in the same area. So if I was going to mark this, this becomes a crucial level, for a move higher. So here, if we look, and I'm just trying to able to catch these bottom ones too. So this becomes your key supply. And then above, whenever you have this many POCs like these stuck together, it's going to be a brutal supply or demand if it's on the bottom. That's going to be acting as huge resistance or big support. So for instance here, you guys see that these two levels it's basically your 2x POC, and I usually mark that like this if I see it. So this is 2x POC, and at this point I don't know, because I don't have the candles to know if this is a virgin point of control. What the virgin means is that it hasn't been tested. So if the price left from here and it never came back, that means the price is virgin and it hasn't been retested. Looking at this, just the shape of this volume profile, it looks like that we came back here and retested it just based on the high and low of this session volume profile. So it's a little bit of cheating, but you learn the tricks as you get more familiar with it. So for instance, this one here, since I know the volume profile is telling me we're kind of right around here, I'll mark these as green. This would be my red. And then on the supply side, there's multiple ways to do this. And if you look at this level right here, these are just stacked right here. 417, really stacked. And below that, you have, multiple levels here, 490, whatever you want to call it, maybe 492. And you have the psychological 4100 that would play a role. So the way I usually do is, if you take the average of all of these, you could do that. Like 4130 is key. Here's this one here. So for me, I would put it at the psychological level of 4100, which is right here. And then when I draw my supply, I would try to catch as many as possible, because there's so many value area highs and lows in this area. So this would be kind of the levels that I'm looking at in terms of supply right here. And you see that there's a lot more supply going all the way to about 4200 here. So this box honestly could be as big as this one, but it's just too wide of a range. 130 points is you can be like Twitter. It's like, hey man, I got the level perfectly. They reject it in this cloud, which is 130 points. So the first level of supply would be somewhere around here that we would be looking for. So I would put it right here, and then you can always validate all of these using your VPVR. So if you don't know what that is, it's your visible range volume profile, and they'll kind of tell you where the average POC is. And this right here, and if you guys can see now, it looks kind of perfect. It basically determines that it's right here at 4118, which we talked about earlier just moments ago. That'll be a crucial level. And you see the shelf right here stops, which is at 4163. And then, you start after 4200, you have a little bit of skinny belly all the way to 4380. So you could use this side to help determine the supply and demand, like right here. Like there's a little bit of supply right here. And how do you know that? Well, take a look at the POCs right here. How many do you have here? So these POCs, over time, they created a shelf that's fairly decent size, right? So it's probably the fourth largest shelf that you see. So this POC you just come here and you would just, not that, you'd mark that and you would put it like right there off of this POC, or if you put it in between these, that would be the level that you look at. Does everybody follow so far? And I know there's new people. I'm just trying to touch some points that might help their trading a little bit. So now that we identified these, right, and you see there's some levels in between. So when I look at, let's say we're intraday charting, right, we want to know levels for Monday, I would look at these levels, like for instance, this one here. I know this can be a bounce here, almost has a 2x POC. So for me, I'll put this as a 2x POC. And I know if you're able to probably break right here below 38.20s, that there's a high chance that you're going to go, 37.90s. Then you have a little bit of support, 37.76. And all of these, when you compare them, if they line up with the levels, the stronger the level is. So for instance, this level has 2 lined up, almost 3 lined up right here. So 37.90 will be fairly important level. And then this one here has perfect 2 lined up right here. 37.75. So if that breaks, then it becomes, clear that you're going to go down. And then finally, once you break this 37.50 here, there's a strong chance that you're going to go to 36.75. And then if you turn on your candles, let's just go to be a little bit cleaner. We'll turn this off right now. And here's the levels. We had no candles, to kind of look off, but here, I'll just extend these a little bit. And here, every one of them was kind of right on. So it hit here, rejected, came back for a retest. Now you're hitting this level here. If you're able to break that, there's a really, really high chance that you're probably going to go somewhere 39.50s. And then if you break that, you go to 4,000, which you can even see on the price action here. This becomes your level of the first resistance here. And just like that, you have your demand is where you want to buy, and you have your supply where you want to be taking profits or looking for shorts, depending on how strong the market is. Everybody, so far, so good?
Thank you, Jordan.
Okay. So that's how you determine the supply and demand. And then intraday, what I like to do, and I introduced you guys recently to this, is I like to look at the sell-off runs. Like sell-off runs means when the price started to kind of come down and the bullish cycle when it started going down. So for instance, for me to find the resistance of this move here, I need a move down that was bigger than this. I can't use this move now, for instance, here, not this. I can't use this move right here to know where the resistance is on the top because it doesn't cover it, and it's far away from the price action. But I could definitely use this move here to figure out where the sellers were heavy and where I can expect, a rejection here. So for instance, this is our value area high right here. Okay, let me just make it a tad bit bigger. This is our resistance right here at 3905. This is our value area high. And that's where the sellers, they did not agree on the price last time when we were selling off, and they said it's too much. And now we're coming back to revisit that point. And, maybe if we break below this level right here, what is it, 38.93, that, you get a little skinny belly all the way to this area, which that's where it bounced, 38.68. And then if you break that, then you get the POC right here at about 38.27, which matches our 2x POC. So the logic and all the conformance points that we want are lining up with the levels that we have. So it kind of gives you a little bit more confidence. And if you want to grab bigger levels, this is what I suggest you do. So first of all, you want to do monthly to date. So for instance, you would start July, whatever the first was of July that we had. July 1st is so you would do July 1st to current. You would grab a fixed profile. You would do weekly to date. And then you can do previous week as well. And then you have year to date. And then sometimes the best thing that you can do is quarterly. And another one that you can do, if things are really, really excessive in terms of price action, you can find like March 20th or a bigger sell-off or buying and drag that one, from that point to the buying action and then to the selling action. So that way you know what's going on. So if you look at this, let me kind of switch to like weekly. So this is, where's our March 20th? So this would be, heavy buying here, right? So if I was to grab, let me move this here. If I was to grab from here to here, what would I be looking for? Meaning, if I grab from here, from the bottom to here, what would I be looking for if I draw a profile here?
Where price might come back to.
Hold on.
Support.
The voice is really low. Say it again.
Where price might come
Man
back
zone?
to.
I would look where the buyers were showing up right here, so I know where they're going to show up again. So here, the buyers were heavy in this area and the value area high because it seems to be the second largest shelf. And when we came back to revisit it, what do you expect? You expect the buyers to defend this level. And what did they do? They defended it for as long as they could. I mean, they pushed it all the way from 41 to 4,600, which is a pretty decent push. But then we dipped below this level, which becomes almost like a easy short on a retest. And look what happened. We dipped below it, and what happened here?
Tested it and went right back down.
Yep, they pushed it right back down. So the first level, if you're shorting here, should have been somewhere around here that you get out, which was about, 39.64. And now this shelf right here from the bottom becomes your resistance, which is 38.86, and we're right below it. Well, we're now above it, but I think I'm on the Maonashi's. Yeah. So we are right above that right here. So if you're able to reclaim this level right here, which is, what is this, 39.64, you have room to go all the way to about 4,100, and I will call this value area high to be my target. So just using volume profile here, this is your green zone. You go heavy on calls here. You're able to break this level right here and close above it, which is 39.64. If you're able to, well, maybe a little bit less. Right here, 39.61, able to break that, well, then you know we have space, clear space to about 439, literally with no, any choppiness right here. This would be the area that's free money. Then level, let's say you have some runners and you're like, hey man, I want to make some more money. Then you have 4,100. And if you guys recall, that matches to that 41.18 level that we mentioned earlier using just the other profiles and session volume profiles. And then above that, obviously you have this level here, which is 41.70. And then if you wanted to mark this shelf here, it would be 41.43. So now you pretty much marked your levels like very close intraday levels. Then you look why we bounced where we bounced, right? So if I mark this level here, it's right on. If I put it below it, it's perfect. When I look at support and resistance off of the shelves, if I'm trading, depends where the price is. So let's say if I'm trying to take this long and this shelf was there, well, this would be my first level of exit here, and I would want to mark that level from the bottom, even right here. I would try to mark it so I don't get kind of killed earlier. So if I'm buying it, let's say 3559, I want this shelf to be on the bottom as much as possible, right? So that I don't get surprised. Like even if you put it right here, it's not a bad thing to do. So that way you catch the move from here to here and you don't get a quick reversal once the supply is hit. You can keep some and then you just have your next level here, and then above. But does everybody understand how to use the volume as a kind of like a shield to protect yourself where it's take profits or not? If the price is above, right? If the price is above, like let's say here, and let's say you're short, let's say you got in short a break of this higher low right here. Well, you want to be taking profits where the gaps are. Like this would be a good gap to take profit, 41.16, and not take it below this shelf here, because there's buyers sitting here. You don't want them to wash you out, so that way you hit your stop loss. Does that make sense to everyone?
Sure does.
Okay. So now we basically triggered to see where the buyers were, like using this shelf.
Right.
If I want to see, go ahead. Somebody saying something? No.
Nope.
If I want to see where the sellers were on this heavy run here, all you have to do is literally grab this tool again, go from here, and I will go to the date, and I will look for these levels to see where the sellers are. And again, we have a shelf right here. You guys see it? And this is what shape profile?
Is that a
Okay,
P?
P shape, yep. So if you look at this, it's the P-shaped volume profile, and we're going down. So the best rejections are at the volume clusters, right? So if you're selling down, if you look here, this is a good range for rejection, and that's pretty much where we rejected so far. If I look at this right here and I draw it right here, this is where we rejected. If we are able to break this shelf here, it looks like there's no shelf until we kind of approach the 4100. And that's why I say once you're able to break this level here, 39.55 or so, you have a strong chance to go to about 41.50, even 4200. And that's just using volume profile, nothing else. And you can always add more confluence points. So for instance, we add this downtrend, or let's make sure it's right on. So if you look at this and we switch to daily, kind of lines up right here that we might hit that on 39.61. If you're able to break 39.61, then we know there's a strong chance that you're going to go to 4,000, 417, that 418 level here. And if you break 439, let's say you hit this level and you get out of your calls, then you're waiting for the 439 to be broken, and then you have a free run all the way to up to here, up to this line here, which should be 495, another 60 points that you could scoop up. So does this make sense to everyone on the call? If it doesn't, please ask questions, because that's kind of what I'm here for. No questions? That's good. It's a good sign. Okay. So now that we got ES, I think we actually got most of the levels here identified for it. So, let's see, 30 minutes. So your value area low is right here. This one is more relevant. Yeah. So any questions on ES, like just looking at it, charting from BP? And all you do is you literally can even just switch tickers here, and it's just going to repeat the whole same volume profile for you on other time frames. So here's your NQ, same run here that we had from here to here. I don't want to delete these. Maybe I should delete these. Okay, so we have a nice little channel. We have the value area low right here at 12.5. So if we continue that run, this will probably be the potential target, because this is from December 21 that we grabbed this POC. So this is our sell-off, and you could even extend this to be here when we started distribution, so that way you don't trick yourself and look. So now you have a level where, you know, we can figure out what's going on. So here's your start of that shelf at 12.2, what was that, 12.213. And you can mark that shelf to be all the way up to here at 12.371. And then you have a lot of supply until you break this, which kind of matches to your previous lower high. You following that? And then from the run up, this is where your POC is, and that's where we seem to have rejected last time. So if you look at this, it kind of rejected perfectly on that. So if you knew we were in a downtrend and we were pulling back, and this POC, I don't know if it was developed at that time or not, but let's say if it was very close to it, this would have been an easy short right here at 12.877, and it would have been driving pretty nicely, and you know where the buyers were next time when you rejected. So you knew the buyers were right here, so you could have scaled out from there. You had the buyers right here, you could have scaled out there, and then you had buyers right here at 11.4, and you would have scaled out. This was their kind of like last chance right here to save them from dipping, was the level right here. And we haven't touched this yet, and I think we probably will soon. So same concept, just different, ticker. You can apply the same logic over and over. Does it make sense? And then the best part is you can use this if you want to use it on 5 minutes, you want to use it on 10 minutes, whatever time frame you want to use it. For instance, let's say you want to use this for intraday charting and trading. So if you grab this run here, let me grab 10 minutes. So if you grab this run here, from here to here, you're able to know where the buyers will show up, where the sellers will show up. Usually, retest of volume area highs and lows are really, really good for shorting, and the POC retests are really, really good. So here's your POC of that run here. That's your POC, and that means the highest point of volume was traded in this area right here. And I'll probably mark it somewhere like around this. Then here's your value area high. So here's your spike up, and it came back for a retest. And if you go into 3 minute like trading, you'll see that this works pretty nicely here. So if you look here, you broke above the value area high, you came back for a retest, and you went higher. Boom. And this alone here is probably plenty for you to make, enough money for the day and walk away. And then here, obviously, we had a shelf that was created. And you can go into whatever is called replay or on demand on TV and look how it would work, so that way you kind of learn it. Here you can expect, if you dip below this, you can expect to short it anytime it comes back to it. So here, if you took a short, you would have hit a stop loss, and it's not going to work every time, 100% of the time. When you go above it and for a retest, you can take it long, and you could have taken that long for a nice low. What is this? 2157 to about 2190. That's pretty good. And here, it went below all of these levels, and it hit this cluster, which is probably your last cluster here before POC. And it came back and they defended that pretty nicely here, and they drove it up. So if you just used, see this guy here. So if you saw this right here, you're basically accumulating at the level where we had a shelf for. And that's probably why the shelf was created, because of this action right here. You go above this low box and you come back and look. You drove it higher. If this one was your first level of profit, you could have taken your profit here. You had a skinny belly. Even if you took your profit here conservatively, remember, you want to be taking profit here, but your value area high is right there. So you take your profit at value area high. If it breaks above it, go again on the retest and keep driving it. Fairly simple, honestly. And you can do this on any chart that you can think about. Here's the cues. So the value area low was here. Here goes value area low. We broke the POC, which is a little bit different than the previous chart we looked at. The POCs are flipped. And here, we broke above the POC and drove much higher to the value area high, but it seems like we're not agreeing on the price on accumulating above the value area high. So if we are able to break below this level, 294.87, you could catch a quick scalp for $2 all the way to this level on Monday. So this will be a quick short, not small profits, quick short to 292.74 right here. And that's just dependent where we open or how we do on the futures. And here you have this low for the intraday. And there you go. So now you have a higher high, lower high. So if you're trading just a naked chart, you had this line here, you connected the two lower highs, and this was your retest. And if you went long here, you would know that your target is right here. Does everybody follow so far? Am I going too fast? So if you played lower high breaks and you use the trend line as your buy, you would have gotten in on this candle here. If you got in on this candle here, your first level would have been the POC, which is right here. So let's say you got in on the break here, or let's say you waited for this to be broken, which was 294.57. You would have been driving it all the way to 295.16, and you would have gotten there out. So that's probably about, what, 70 cents that you would have caught on Qs, which is pretty good at 2 o'clock.
Hey, Shorty.
Mm-hmm.
Yeah, isn't this is an intraday candle, right? So it's not gonna, your volume's not gonna look like that until the end of the day, isn't it?
Well, I mean, this is at 2 o'clock. This volume shelf, if you go back in time and you test it, the structure of this volume profile is not gonna, majority of your volume already happened on this run here. And I grabbed the volume shelf from here, remember? This is my volume shelf. I grabbed it from something that already occurred. If I grab it from here, this shelf is already there. This is already set. I'm looking to where the buyers are going to show up now. I'm looking, you made this run. Thank you for the run. Now I want to know, when you start dipping, where can I buy the retracements up?
Yeah, I understand. My bad. I was thinking you were going to the end of the time period.
No. I was just looking at this run. So for me, these are, points here. You can buy it on this POC. You can short it on this value area high. You can short it here, buy on a retest here. If it breaks up, buy it on a retest, which you had a little bit here. And on value area low, this was a nice shelf for you to go long.
Is that something that works out the first 30 minutes of the day? We maybe just go to...
Usually when the initial balance set is high, like for instance here, it was set, oh, no, not that. So this is your initial balance high right here for the day, and your initial balance low. So this was a typical day in the market, right? So this is your initial balance low and initial balance high. So usually when you see a run up and run down, that's when you can draw this, and let's say this reversed and this was a down. Just grab it the same way and use it for selling and shorting. Let me see if we can find. So let me look for one that triggers selling here, for instance. Here, let's see, this one.
Jordy, could you also do a retracement on that move to see if there's confluence with the
Which one?
Based on volume profile?
Like fibs on this?
Yeah, basically like the same move that you just took the volume profile of. Could we also do fib retracements and see if there's confluence? Yeah.
There you go, 61.8.
Yeah, I just grabbed it and saw that the 61.8 was kind of perfect.
Yep. So it held here, and you can always do that. I mean, the fibs are, one of my favorite things to kind of use for retracements and pullbacks. And then here's your upper target. So this becomes your, once you break either side, you can go long or short. So let me find one where we sold off, and that's where you would look to short. For instance, let's look at this one here. So if we look at the one for shorting, let's say it's up to here, and this one honestly did not. So once you break, so if you're shorting here and you break the value area high of that action, definitely go long on it. So if you look here, there was a lot of selling here, and the POC happened to be here, and then the value area low was here. So if I was to short this, right, my first short entry would have been at the POC, no questions asked. Where did it go? Right there. So my first entry would have been the short right here, the POC, and that probably would have worked out 278 to about 270. And you should know by now that this right here was your low volume cluster here that you probably should get out. Right? So if you shorted here, this would have been your first kind of get out entry. If you're able to break this, remember, you go above it, you can go along to the next level, which was your value area high here. And here, if you shorted a value area high, you would have hit the stop loss. And then moving a little bit, and I'm trying to get this level here, maybe somewhere around here. So if you look at this level here for the day, they created basically a cluster here once they broke the value area high, and there was a lot of buyers. So you broke above this on the selling, and then you basically initiated buying here. And I'm just looking at today's day, right, for trading. I usually, for intraday levels, look the day before as well. I will never just base it off of this run. For me, I would have definitely looked at this, whole session here of the volume. So it would be something like from here to here, so I know where I can expect a rejection or what's going on from the day before. So this was my POC. This is my value area high. So at the POC of the previous day, especially if you're hitting from the bottom, it's probably a good level to short. And that would have been the case in this. But just based on this run, for shorting, this probably would have washed you out, and you could have made one good trade here. Here you would have hit a stop loss, and then we flipped to the bullish side, and you hit the previous day POC. I always use previous day with the current day to trade on intraday. It doesn't make sense not to, because this is developing and this is already developed. So if you look at...
Are you always using real-time hours instead of extended for that?
Yeah. Even if you do extended here, you're not really going to get much in terms of volume. So for instance, if I grab it from here, let's say, so let's just mark this POC to see how much they shift. It shouldn't shift much. So if I change this, this is our with post hours, and I shift it now there. I mean, honestly, not much for me to I guess worry about it too much. So this is the regular trading hour. So I know this is the POC from the day before. I know, for instance, this is the value area high. And this is my value area high as well of the day prior. And then if you're doing trading and you're trying to figure out where this can go. So here you go. So this is my value area low from the day before, and look where we bounced from that. Perfect hit all the way. I mean, all the way went to this. It broke the value area high of the previous day. And I mean, if you're playing this, my first exit would be where? If I went long on here from the previous day, where should you get out?
POC.
Yeah. You should get out at the POC, and you should not really question it too much. And I'm talking about previous day POC. This would be your first exit. And if you're really, really, conservative and you don't want to take much risks, then if you're scalping, you had one level right here. So you would have played 50 cents here. You would have played, something around here. You had a little bit of level right there. And then let's say you got out here. So these would be your levels that you're kind of after. Hey, you come back here, I'll buy long, get out, break this, go long, get out, and play the levels as you see them from the volume profiles. And this is just 2 days, guys. This is not much data, but for intraday, you can use this. And then if you added your, what is the last week? So let's say from the 4th, Where's the 4th? Well, we would have been off, so. And if you add this piece here, now you get a full week of data, right, to know. So your value area low is here at 286 right now. And a perfect short happens to be kind of right below this level here. And I hate when I pick the wrong thing. So this would be short to, what is this level here? 287-ish, I almost say 287, which should be my value area. Call it 286.76. It would kind of go all the way to this level. And then in between, if you're risk averse, you'll have levels for trimming, right? You have some right there. You have some right there. Here. And then these would be the levels that you have. If you're an intraday trader, you do not want to have huge gaps between your levels. These would be the levels that you care about. And now if you, just add a little bit of confluence points. So where else could you take place here? Let me just hide this guy. So let's see. So we know, how do you guys think? Remember that? Anyone?
Sorry, what was the question?
Where else could you take a short here?
On a break of the higher low trend line.
Higher low, this one here, or this one here?
On that trend line.
Yep, so you could definitely short here, which is a little bit more aggressive, and you have to be a little bit quicker with your profits. So let's say we break this tomorrow to, what is it, like 294, call it 5. If you break this, then you have about 293.95 to dip here, and this is where you can expect a bounce in this area. This is the area where you do not want to be in a trade when it's so close together like this. So if you break here, you're looking to get out right on this point. And if you see that it's breaking, then great. You just keep driving it to the bottom side here, and this will be the next trim that you have. And then if you see that we break, value area prior day high, then, and our key entry was here. This was our kind of what we were looking for. But if you can drive it all the way from here and trim and leave some runners, then you have a really good trade. Okay, and then you keep going, and you have the next range, which opens up the space a little bit more. And if you think about price action, this would be your higher low, and now we're contracting really, really here on the top. And I'm just going to remove all of this. So if you mark these levels, for instance, let's go on 5 minutes, right? So if you look at these levels, right? So this is your higher high here. Then you have your right here, and you guys see that you obviously are making lower highs. So until you break this level here, if you break 296, psychologically you're probably going to go to 300, and I'm sure we have a level there. Here, if you just look at these 5 minutes. One, if you wanted to wait and be patient on price action, this becomes your shorting level, and this becomes your potential bounce area right here as well. And you see that you have a little cluster of indecision candles right here. And if you extend that to the right, this would be your, if I go on VPVR, there's going to be some kind of shelf here in between. Yeah, there goes a little shelf right here on the last resort. So if you're going to short right here, like below this, you want to make sure you're getting out right around this area. And this is just naked trading. And if you short lower high, there's a high chance you're going to go to the previous high as well, but you see the support here. So that's why naked trading, sometimes you need help with the volume, and that's where you make a deadly combo. So if you short here, you definitely want to be getting out before the bottom of this because they're going to defend this area right here where you see a shelf. They're going to be defending this area. So you short here, let's say 295. Well, all the way to 294.20, about 80 cents. You can make decent money on Qs. Okay, so here's my, my higher low. And this one will be really, really important. If you're able to break this one, this becomes clearly a short level all the way. You have a little bit of here, but I'm pretty certain that it would go all the way to about here. So once you break this, you're headed to this level here, 288, which I think that's what we had previously. Yep, there it goes. So here, short 287, that's pretty much what we said here. Short all the way here. I mean, we get out a little bit right here, 288, probably get out here. So any questions? Am I confusing anyone? The volume profile is a click. Okay. So a few of you asked, how do you know which POCs do you mark up, right? When you're adding session volume profiles, you use 30 minutes. Let's say I don't know why this one is HD. What's the difference between them? I just want a regular one. Okay.
I don't know the difference with HD either, but I know that it gives completely different levels.
Really?
Yes.
Oh, wow. I don't know how I changed this, but okay. All my colors are changed, so yeah. Let me go on something. I don't trade Kroger much. Let me just okay. So for instance, if I was to trade Kroger, I would just zoom out and see where the key levels of supply look to be clustered. So it looks to be clustered mainly in this area right here. And you have a POC right around there, and that's where it looks like strong high rejection. Strong high means you tap the level and you literally collapse from that level here. And if you look here, that's pretty much what happened here. You hit this level and you came back down. From support standpoint, once you hit this POC here, look what happens. So of course you want to mark this. You want to mark that level because it has importance because the buyer showed up in abundance here, so it becomes. And now you kind of zoom out. Let me just turn this off and look now. Oh wow, we have a nice range in here that that you see that they're respecting in between so far. And here it seemed like they had a little bit of liquidity, that they're grabbing some. Why is my computer so slow?
Can I ask a stupid question, Shorty? How come you use 100 for your row size?
I don't know. That's a good question. I typically do that, I believe, on these.
Okay.
Yeah, I do 168 for these.
Do you use like? No, I was like, because Trading Lit says to use 200, so I was just wondering if there was a reason.
200 would give you just a lot of. I mean, you can use it, and if you uncheck this, it would just give a lot more of these lines here, which you can definitely use it if you care to see more lines. I just maybe don't care, or I don't mind it. It looks good either way.
Okay, just curious if there was a reason.
It would just give you more levels here. And some people, honestly, they keep it even to about, if you change this to about 75, it just gives them less, and they don't. So you see now here, clear level here.
Less noise.
This is a rejection, less noise. So I'm able to clearly see this, like right here. I know this is going to be a nice area. You break below or above it on the retest, that's great. And we have a VPOC right here. And anytime you have a VPOC that's recent, you definitely don't want to miss marking that level. So like this area right here that I just marked, it's a nice VPOC, and you see the volume around it is pretty nice as well. So if I select the right tool, I do this, and I'm just looking for this. You see that there's a little gap there. I don't know if you guys can see it, but there's a little gap, and I'm just grabbing to the bottom of that gap right here. And this becomes a pretty nice demand if you think about it, right? So if we come to this level here, there's a strong chance that you should buy Kroger on the bounce and play it. And also there's a rejection that came right here. I did that. And then here, and there, you can mark these levels right here. Just so let me show you. You can have these levels. I think they show up. Let me not extend them. So now, if I wanted to mark recent value area lows and highs, this is the level right here. And I would mark these and label them as, previous day value area low. So if I'm able to break this value area low, there's a strong chance that you're going to get this next time. You're going to get a dip to 47.33. I don't trade Kroger. I'm not, planning on taking this trade, but I'm just giving you levels that I would look at. This right here, it just looks like it's in the range. Like if you look at all these POCs, all of it's right here. There's really no movement. And the best thing you can do is, what I like to do is, I'll switch to like 2 hours and put these Ashi candles on, and I'll just watch. If you look at this, to me, this is not tradable. You can scalp this, but this is definitely not tradable. So if you look at this range right here, you have a range right here, and then you have a range right here, and it's been in that, I don't know, $4 range since June 17th. And it has a bear flag. To me, it's just not enough movement for me to play this stock, for instance. And this happens, of course, if I look at SPY, we have this, and you can see the same thing as SPY. So you have a level right here at 293.41. You had an accumulation or distribution, which happens to be here. I'm able to see clearly, where are the levels that we are hitting right now. So if I look at SPX, and we'll chart SPX here. So I did the same on this chart here. I went 2 hours. I looked at it, right? So for instance, let me delete this line because it's not clean. If you look at this line here, this is where the break of structure would occur, and I'm able to know where's the clear support and resistance. If I was to, short, you have a level here that we are hitting, right? You guys see that. But then right below that, you have a little bit of demand. So for me, would you really short it here in order to get caught right here? I personally don't. And,
not a chance.
Like you look here, there's a chance the buyers might show up all the way till this cloud's gone. So like once 37.20 breaks, there's a high chance you're going to dump. So if you trade this from the break of this level, which was, let's say, 3811, let's say 3811 breaks, you have a little bit of room here. This is a pretty good reward right here to short it. So this would be your reward, and this is where you'd be looking to close it. And, if you have some runners and you have a bloodbath, then, just let them run. But 2 hours for me gives me the best picture. And like, let me see some tickers that I don't trade much. Okay, well, maybe I'd mark this one. So for instance, if you look here, this one's been in a really bad down channel for some time. Anyone have a stock that they're looking at that, you want my feedback on, or what I think? Besides before we trade it.
Please look at Costco.
Yeah, let's look at Costco.
Thank you.
Oh, wow. So it had a nice bounce. So here's Costco. If you look at 2 hours, right, you see where the wicks are happening. So right here, if you go 5, 10, 63 will be, man, they ran it back a lot. That's crazy. So it went from 406 all the way to about, 510. That's a pretty nice run up. And you guys notice something that I've taught you before. So if you look at, let's say, 4-hour candles, it took 1, 2, 3, 4, 5, 6 candles to dump it. So 24 hours, it dumped. And then how long has it taken it to climb back up? I mean, from May 20th till July now, not done yet. And this happened from May 10th to May 20th, the whole dump. But if you look at the candles, May 18th to May 20th. So 2 days trading, it dumped, and then it's been climbing up ever since. So if you're going to be, and I don't know if your intentions are, scalping or whatnot, but here, it looks like an ascending triangle, but it wasn't. It's still in a bear flag mode. So if it's going to, let's say, reject here, you can scalp it here for long, but I'd rather play the short side around here. And if you go to 30 minutes and you enable your VP, I'm pretty sure there's a VPOC somewhere around that area that we are kind of eyeing here. Let's see. Second, let me remove. Okay, so look at this cluster again. We just talked about this earlier. Look at the cluster of volumes here, the VPs. This is going to be dangerous for it to get over it. Let me kind of go here. Why not just do this? Tile, extend right. And look where, okay, well, look where we rejected to begin with. Right on the money, we rejected that level. So now the next level, previous highs, right in that area, you have a VPOC. You have one right here, and you have one here. So if they break this 510 level, there's a high chance you're going to go to 520 level. But I'll be cautious on this a little bit more than going long here. I'll be looking to see if there's any short opportunities coming up, because the market's still biased to the short side, in my opinion. And if you look at, for instance, daily, I mean, to me, this still looks like a bear flag. And look what lines up right there at 50%. 509 with that lower high. Okay, does that make sense? So you just zoom out a little bit, and if you like Ashi candles, you can use them. Kind of takes out all the noise that you see, and you're able to see clear support and resistance lines on it.
Yes, it makes sense. Thank you, sir.
And here's Walmart. Same kind of concept in Walmart. So I'm on the daily chart. If you look at Walmart regular candles, so this was your previous high here. Right here, here's your resistance. And now we have a little bit of an issue in Walmart. And they failed to close right here. So for me, this, what would you guys do here if you had to pick a trade?
It looks like a short op to me.
Yeah, short below 125.42.
Yeah, to me, it's a short opportunity, right? So if you look at it, I mean, even here on 15 minutes, like if you're able to break this, or if you're a little bit more conservative, break below 125 or this area 124, comes an easy short. In order to go to the previous high, it has a little bit of room, to go, but it seems like it's slowing down. Come on. 2 hours. And you see the candles here, right? Indecision, indecision. So And we hit this supply right here off of this candle on Ashes, and it looks probably better on regular candle right here. There's the indecision candle. So we hit that supply pretty nice. Now, if we break it, it's an easy short. And I'm just looking to see, how's it moving? And here is your previous high. So it has a little bit of room. And if we can break this level, 126, call it, 126.6. If you break this, there's a high chance you're going to go here. And then all you can do is you can turn on your volume profile and see what's going on here. Hopefully it turns on today. And look, as soon as you break this level, you have a little bit of room all the way to up to here, 130. So let the volume and your price action kind of confirm which way you're going to go. So SPX, if I look at this, let's say on 15 minutes, really not much happened on Friday when you think about it. Here's your SPX. Look at the levels on SPX right here. You guys see that open? Oh, I'm trying to turn this off. Here's your open. This is your range on Friday, guys. And I'll just give you an idea, right? If you look at this right here, and you look at this box right here, it could be setting up for pretty much the same setup. You guys see that? What did we have? We had a run up. So you had a run. Let's see how far was the run from the bottom here to this. You had about 5% run on the bottom of this to the top of this one. You had about a 4.66 run. So now, if there's a buyer's exhaustion, look what happens last time. So you break, there's a high chance that you come back to this 38.12 level here. And if that breaks, then you're going back to that level where we said that nice demand's waiting. So this becomes an easy short here on 15 minutes. If you break previous day low right here, it's going to indicate to me that you lost the momentum and that there's a buyer's exhaustion here. And I'll show you something else that I was looking at. I'll just grab the bar. So if you look at this and you just go look at daily, what do you notice that's telling you buyer's exhaustion?
Volume.
Decreasing volume.
Yeah, there's decreasing volume. And then you had the little bit here, and this was a better volume, but it was still decreasing, right? And now you're doing the same thing and you're hitting some major levels. So, if you're able, I would love for them to push 39.50. Honestly, that would be my dream scenario, that they push to the top of this trend line, which would be the previous high as well of this candle. So it would be really nice if they do that. But this is a pretty easy short level on Monday if we do get it. So at 38.69, you could take this all the way to about 70, 60 points down. And that's something I'm going to be watching. Okay, let's look at Tessie. Okay, well, here's our go long level from last time that we had, 692. We said short here, and that broke really badly. And then we had a bull flag, and there's news, I think with Twitter or something. Let me see. Did it dump? Wow. So he backed out of the deal?
Yeah.
Yeah, of course. If you guys remember last time, we talked about this whole ordeal of Tesla and Twitter. I told you it's never going to happen. It was just a stunt.
He had to distract everyone from all the babies he was making.
Well, if you think about it, there was the little case with Amber, and his name was brought up a few times in that case.
Yep.
So I'm looking at this level right here, where we bounced from last time, and look where we're kind of getting hit now. Right on that level.
After hours, it flew up.
So it rips higher. Yeah, I'll be interested to see what happens here at this level. Let me see. It might be setting up, catching up. Are you thinking long or short?
I think some people are long and some are short.
I mean, it's got the same pattern as Amazon and Google. I mean, they're just kind of.
Yeah, I'll be looking short at 791, 800 levels. Let me show you here why. So if you look at the clouds, this is my daily cloud here, and we're entering a short, like a squeeze right here. It's shown right here by those little yellow lines. So there's a high chance, you know, if we break the 780 right here, you can definitely go along on this, and I think it's up from what I'm seeing after hours, right?
Yeah, it closed at 769.
769. Okay, so it's not above this level.
Yeah,
So if you're able to break 781, it might be worth it to look at it. Otherwise, it's hitting the daily top, and then if I look at the rest of the clouds, what is this? This is my quarterly.
Hey, Shorty, is that cloud open on your toss?
Which one? It's open, yeah. This one's open right here. This one's open, and the MACD here is fairly strong right now. Let me check the daily. So the daily it's really green. It's 9.5 green. And then if I look at the weekly here, let me make sure I'm on the weekly. Yep. So if you look at this, right, it held the weekly bottom here perfectly. This would be the weekly mid. So in between these levels, there's not much from the cloud perspective that they're going to care about. They, meaning kind of like the market makers. So there's about 50 points that it must push to. So if we break 781, this right here, there's a high probability that you might go 830, and this would be, in my mind, an easy short as you're hitting a weekly mid. And then if you look at monthlies, here's your monthly mid here. So this right here would be your monthly mid, and I'll let Catching Rockets or people that use clouds tell you about the monthly mid. You're really not going to go through this fairly easily.
Yeah,
so there's a strong.
You'll either see a rejection there or like a flag or something.
Yep. But that's a really bullish candle here, so. So I would take this long over that 780 level. That would be my trigger to go long on. And looking at clouds, I mean, even now, I guess we're over this level. So they're probably coming back for a retest of the previous day high here. Let me look at a little bit higher time. So this might be a pretty good setup. If we decide that we want to take it long, then you will have some trimming at 791. 809, which matches very closely to some of the levels that we have here. So you have 814 as monthly mid, which is probably around here, this bottom of this wick here. 821. So I would probably, if it holds and the market's, let's say, somewhat green tomorrow, that 760 level might be a good area for a bounce, especially when you consider the zone that we are consolidating in. This 756, 764 becomes your bounce area on this. Kind of like right here. And this would be an ideal entry for taking a long tomorrow. Let me see. And you see here as well, if we break below these levels, then I just don't know how the market's really going to react. What happened after hours, I don't trust much. And if we break below these levels, you see where we're headed. You know, you have a little bit of a shelf here, your POC is right there. So you have 737, and then 727, 713. And I think me and you were stuck trading Tesla in this range at one point. It was in this area that we were trading it.
Yeah, unfortunately, we didn't hit 650 that 1 week.
Yeah. Ugh. Okay. And we'll see how the futures open tonight. I mean, that's going to be our sure sign of how to play this tomorrow. Is anyone bullish, bearish for this week? I mean, I'm not asking for your bias. I'm just thinking, what do you guys think? Like up or down?
I think they run it up one more day and then they just crush it.
Yeah, and I think there's a lot of Fed speakers. I think the same way. I think there's a lot going on this week.
Yeah, we have banks reporting this week. I was expecting banks should actually do pretty well because there's not going to be a lot of foreclosures yet.
I think JPM is the best play so far in the market for long, but I think JPM is going to go to 110 first. So if you guys look at JPM, this is my monthly bottom. Look where is JPM holding. Literally executed a full cycle on a monthly top down right here. So now if you look at the daily, look at the daily divergence that it created. Really, really nice divergence. And look where it bounced from. Let me show you 30 minutes.
Didn't JPM have a huge exposure to Russia?
I really don't know. I don't trade banks that much. But this is where I want JPM to buy. Who knows why?
Closed cloud.
Yeah, it's a closed cloud here. This would be a great opportunity to buy it for a scalp. And I think they have an ER coming up.
Thursday,
yeah. So if we can get this to dump and drive it up, they will drive it up $5 for us. So there's a high chance that this will occur and take it to 110 here, guys. And I'll be there for this one.
Yeah,
I'll watch this one.
We have Fed speakers on Monday and Tuesday, and then CPI on Wednesday.
Yeah, so it's a full week.
You talking option shorty or stock?
I would trade options on this one for this week, and I would anything above 110, around 110, I would start adding some shares on this. And Goldman Sachs, it looks interesting as well. And look how well these hit. Here's your Goldman Sachs bottom cloud to the top cloud on the dot. And now this breaks right here. This trend line is going to 290 here. So it would be nice if we get a $6 dump on Goldman Sachs and JPM banks overall. And here's your monthly on, is this monthly? Still, yeah, monthly. Let's look at the weekly. So it held the weekly bottom here.
What has Diamond been? Has he been hating on the economy.
Who's Diamond?
The Chase
Jamie
CEO.
Dimon.
Oh, like a speaker.
Yeah, he's always out in the media, so I'm just curious in terms of
bearish or bullish. I don't know.
Last I heard, JP, he was the hell's gonna freeze over. We're all going down.
Okay.
Yeah.
Because he may. I mean, he's got interest.
Well, yeah. No, you're right. I do think he has interest, and you guys can just want to point out when I say don't trade in the cloud. Look at this right here, the inside the cloud when you're trading the cloud. You guys see how choppy this is? And once you break the clouds, you really get a nice little rush. And then here you came back for that cloud level. Here dipped a little bit below. Took off.
This may be a little off track, but how do you get an idea on something that's, if you're playing an earnings play, like let's say for example Tesla has earnings, you know, it like swings 100 points pre-market. How do you figure out what those points are?
I'm not sure I follow. What do you mean? Maybe simplify it.
Okay, so you know when you're looking at something like Tesla or, you know, Amazon or whatever, before they announce the earnings, you normally get this almost like algo reaction, fly up and down. But they seem to hit certain levels, and I think in the past you've mentioned, oh yeah, see, it hit this level, and he was expecting that's where it would go to. How do you determine?
It's usually the cloud itself. So, for instance, you know, Tesla's probably want to touch this 830 at some point in the near future. I don't think it's going to go to 1,000 just yet. And I think Tesla has some levels on the monthly here that we talked about earlier that are really close by. So I determine these levels, and I have a view where all of these clouds are straight lines on one, and it gives me basically the momentum of least or path of least resistance. If there's a lot of these clouds that are stacked above it, let's say monthly here, you know, monthly here, here, and the bottom is open, there's a strong chance you push it up and then you dump it all the way down, or you just straight dump to the path of least resistance. So I look at the clouds to help me determine, you know, how, you know, where is it going? Like this one here is a monthly mid or a monthly top. You know, to get to the monthly top, you have the monthly mid. I'm pretty sure there's some other stuff in here that would stand in the way. So it held the quarterly bottom at 646 or quarterly top. So if you break this 646 on Tesla, like this level, you're headed to about 384. So that's kind of how I look at it. I'll look at these levels and I base it off of these. And then, of course, the POCs, the volume profile. I honestly would not trade without volume profile more so than anything. Anyone else? Any other questions? I have to get going. I have some guests already that came through. So we'll hold a watch list tonight. Let's just see how we open the future so that way we know how to play the day after. We'll probably do like 9:30, 10 p.m. I'll let you guys know as as my guests leave here.
Thank you.
Thanks, Shorty.
Yeah.
All right, guys. Hopefully you learned something new, and I'll talk to you tonight.
Later, dude.
All right, bye, guys.